Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we are in the midst of this continued earnings bonanza. We're going to talk as many as we can. We had GM, Coke this morning, Anthem, Boeing. That's just 4 of the 30 we'd like to get to that we have on our list. We're going to talk about this HMNY massive reverse split, 1 for 250, huge reverse stock split. We're going to talk about that and fading the rally in L Brands after hours. Our guest today, 8:35, will be joined by Sean Udall from Quantum Trading Strategies. Joel, tell us what's happening in the market overnight.
A little bit weak in the S&P 500 futures. Your pre-market high stands at 2175. That's just above the close that you had there at 21 even. So that's going to be a good resistance point. On the downside, really no worries until we take out 10 1/4. That was the low from yesterday. So far, the intraday or the pre-market low stands at 14 even. Crude just in a trading range, 67.5 to 69. We got to the upper part of that trading range last night, 68.93. So we'll see if it breaks out of that little 1.5-point range. Gold up 650 at 12.32 even. Silver just muddling in the mid 15 handle, $15.60, up 7 cents. Bitcoin, a little stall in the rally here. The futures are down 37.50, but still above 8,000. And before I say hello to Dennis, I want to say hello to some new people here in the Google chat. We got Money Buys Power, Trader Axe, Matt Diamond. We got a lot of new people in there. So please reach out to us. Any questions? Dennis, you must be a busy man this morning.
Very busy. A lot of positions on. It's earnings. I've got my head on the swivel here this morning. Joel, is just so much news happening in everything. And I don't even know where you want to start here this morning. We can go to anywhere you want. I'll let Spencer lead the way here today. There's a million headlines. Spencer, lead the way.
All right, let's start with Coke earnings, I guess.
Coke, that's the one. That's out of the blue.
Well, maybe we won't let Spencer lead the
way. They're high. They're high on the list.
Spencer, you can't lead the way anymore.
They're high on the list. Fine. GM.
GM's a better one.
Okay, gosh.
He picks a stock that's up a nickel.
Oh my God! I hadn't even looked at the chart yet. Give me okay.
Right. That's the rage for the day.
Getting annihilated. Motor City. That's a good start. We're in the Motor City. Let's talk the GM report. All the locals want to know how GM did, and I think they can tell from the stock chart they didn't do well.
Q2 EPS $1.81 versus $1.86 estimate, so a 5-cent miss there. Sales 36.76 versus 36.73 billion, so a slight beat on that number, but the EPS miss is what I think people are paying attention to so far.
You know what? It's just had a nice green candle here right now. What's the low, pre-market low, Joel?
Oh, boy, the pre-market low is 37 even, Dennis.
I think the low is in. I think the low of the day is in. You know why I think that? Because we had a lot of bounces in the big dividend names, the more defensive stocks. Not that GM is defensive, but it's a yield play, 4.06%. I mean, 3M, we talked about it. It flushed out off the open yesterday, caught a bid, never looked back. This started with Philip Morris. So go back to Philip Morris, got annihilated on earnings. It turned around in the afternoon, started rallying, and by the next day got all the losses back. They're buying the higher yielder defensive names on the pullbacks. That's the trend I'm starting to realize. AT&T was a bit of the same story there last night as well. AT&T sold off to under $31, already gotten 2/3 of the losses back here. I think GM, I don't know if it's going to pull a 3M and go green today, but I think the low is in, and I think it could start to get back up the 8 handle here too. I'm interested in here. Putting out a trade, you don't want to make a new lows. It's always tough in the pre-market because the volume's less, though. So I'll do it better in the regular session. So I love a shot where, you got a 37 bogey. it opens up, let's say 37.50, swooshes down to 37 and starts to find a bid. But I like it down in the lower 37s here now. I think the low is in.
Oh boy, this could be a really bad day for GM, Dennis, because both me and you are on the same side of this trade. I do. I'm not even talking for like a trade or a scalp. I have been looking at this stock since it gapped up on May 29th. It had a huge day. I can't remember. I think someone put a big investment in their Opal unit, and it gave it a high valuation. It took off. And I wrote down, I said, when this thing fills the gap at 37.87, I'm going to take a shot here in my long-term portfolio. I'm not sure, if we're going to be able to get it. Yeah, and whatever. I guess the only thing is if you wake up one morning and Mr. Buffett's out of the stock, then, you're going to be looking at a 2-point down day. I'm not these tariffs things. They're on again. They're off again. I think they're making moves into electric cars. So that I agree with you on that one. I got 37 even as my my pre-market low. It could be like an odd lot print. A lot of volume, 400,000 are trading. If this is short, if you're short this stock, are you going to get a better opportunity to bring it in?
I think you're cut. I think this thing. I think when we look at it in the afternoon, I think it's above $38. So I think the low of it, so I'm making a couple of calls. I think the low of the day is, and I don't think it's going through 37. And I think that they come in just because I saw what they did in the defense. And obviously General Motors, Philip Morris, they're all completely different companies, but they're all kind of the same because they're higher yielding. People are in them more for the dividend. Yep. And that's the kind of stocks that they were kind of buying back. The exception yesterday, which makes me somewhat cautious, was Whirlpool, because Whirlpool just kept flushing. No pun intended. And it just kept going down all day. So you kind of want to wait until I get the open and get the first green candle. I mean, 3M did not rally off the hop. 3M took a little while. It opened up at like 193, flushed in the first 5 minutes, then started to get back up through the open. When they go back up through the opening print, that's usually the sign that, the stock is going to show some strength. So let's say hypothetically this opens at 37.50, does a little flush, maybe down, retest 37. The buy point would be when it gets back up through the open. At like 37.5, because this thing could still flush more here yet. We don't know. It's still very early, or an hour and a half before the open. So let's just wait. Right now it's flushing even more. So I'm going to wait until I get that opening print, see where it opens, then mark that point. If it comes back through, if it gets flushed and then comes back up through that open, that's when I'm going to strike.
All right, let's take a quick look at its brethren here, Ford's. Holy mackerel, man. This thing is just in the dumpster, down 27 cents. I'm looking at the monthly lows here. Look at this, 10.14, 10.19. I'm going to wait for the lower 10 handle. But, boy, just a horrible look.
Get a shot today, maybe.
Yeah, I think you might.
29. I don't know, maybe not, but it depends on what GM. I mean, if GM starts turning around, Ford will turn around here too, but holy mackerel.
Ford is also
after the dog.
Ford is after the bell today.
And Ford has been, in my portfolio here for a long time. It's been a dog for a long time. I'm averaging around 13.5, which actually isn't even that bad a price considering, where it's been over the course of the last. It was like $30 or $35. I've got it in there. I've been collecting the dividend for basically a year or basically 5 years. I don't know. It's been a dog though. I'm not adding to it. So it's one of those value traps. It's been a value trap, and maybe GM's going to be the same thing. But, if they start to get some love from electric cars, if Tesla, it depends on Teslas to a certain extent too. I mean, if Tesla starts going the doghouse, I think you'll see GM and Ford start to catch a bid. But if they turn around and just buy Tesla back to all-time highs again, then, it's probably not good for GM and Ford. They kind of move the opposite, at least sometimes.
All right, let's finish up with FCAU here.
Yeah, they had some unfortunate news this morning. I guess not entirely unexpected, but their now former CEO, they had to change a few days ago. Remember, Sergio Marchionne has passed away after undergoing surgery, I guess last week or a couple of weeks ago, and so he has passed away. He kind of transformed that company. He oversaw several mergers. I think he was at the helm for 10 or 12 years. And so, unfortunate news this morning for Fiat Chrysler.
And stock reported earnings too, did it not?
I don't think that's out yet.
I believe they reported. It's not out yet.
I don't think that's out yet, though.
It's due to come out. So right now they're just going on the headline, with the CEO leaving. But I thought that they reported too. Are they on your schedule? They're on mine.
They're on my schedule. I just don't think it's out yet.
I'm just trying to run and see if it's out yet too, because it's surprising the stock will be down this much. But I guess if it's out of the blue, maybe that's the case.
Unless it just came out. Hold on a second. Let me check.
No, I think it is out.
Yeah,
I think it is out. I don't have the numbers in front of me either. So, Chad, if you can help us, we don't know. There's so many earnings today. 145 stocks reporting today. So if we miss one and we miss the report, it's because it got lost. But Rocket says it is out. So I believe they are out too. Anyway, so you got obviously poor results here. We don't have to analyze this because the market's doing it for you. Remember, this is already active over in Europe. So it's traded 1 million shares here. The risk arbs are keeping a tight 2-cent market. So price discovery has already happened here. And they've spoken to the tune of down 8%. So it looks right now to be a very, very ugly day for your traditional automakers.
This one, you just made a pre-market low at 17.23. Now, this stock compared to GM, GM had a little bit of a run, but this stock just having one heck of a run. Ran into some resistance just above 23. That's pulling back here. This one too, I would look at. I mean, if you're looking at the resumption of the trend, 17.85, where you're currently trading, was your low in January. Then see a couple monthly lows around the $17 area. Not sure you're going to get to bring it in there today, but at least this one had a much better looking uptrend than either Ford or GM. So this may be a pick of the litter if you're going into the autos.
Pick of the litter. Million other stocks are reported here. Let's go to AT&T from last night. We just briefly talked about it there. Spencer, give the results, and Joel break down the after hours action.
AT&T Q2 EPS of 91 cents versus an 85-cent estimate. As far as guidance that they gave, fiscal year EPS guidance, $3.50. That's 10 cents higher than the estimate that was raised actually from the estimate, which is $3.40. So they raised the fiscal year EPS by 10 cents and a earnings beat for AT&T.
No position on it yet. I still have the long-term investment position I've had in there for like 20 years. No trading position, but I'm watching this one. I want to see where it opens, and I think this has the possibility to go green as well. So we pulled back. What's the after-hours low?
Well, there was a really big spike down to 30.76. You had a bracket.
And that coincides with the 30.80 low.
Yes, exactly. Exactly. Yeah.
I think the low is in on this one too. And you know what? I think it goes green today. So we're down 1% here. We're 31.35 when making this call. I think the stock is green today. I think it could even challenge 32. So I think these are the kind of stocks that they're buying, at least short term. I'm not saying to go out there and stick AT&T. It's safe to go in now. But I'm saying as a trade, it had a nice candle yesterday. Now, everybody who was short the thing is like, I get a second shot here. These earnings were not that bad. I think the stock could actually go green. Maybe I'm wrong. These are just my, obviously this shows just our opinion, but we're trying to use, all the evidence that we see out there to build a case. And I'm building the case that I saw Philip Morris get annihilated on a crappy report and bounce back. I saw 3M get annihilated on a not so great report and bounce back. I think AT&T, and this is just, those value dividend names. This is a huge dividend, 6.38%. I think you got institutional buyers below. Near the lower of 31. I think it's enough to drive this thing actually higher. I think they come in here and buy today. I think it goes green. My opinion.
This is going to be a rough day for AT&T too, Dennis, because you and I are on the same side of this.
You think it's going to go green too?
Yeah,
these are bold calls we're making, me and Joel. We're trying to say AT&T is going to go. I'd say GM is going to go green, but I think GM is going to bounce back. It's a long ways to go green. AT&T is close though. It's only 1% off. I think it goes green.
The last 3 days, you found buyers at the $31 level, 104, 30.80, and 101. And now someone is just stepping up here. It looks like can't go much lower than you've had some prints at 31.15, 31.20, but boy, oh boy, love to get this thing near 31. As Dennis mentioned, 30.80 was the low of the move. In order to get green, you got to close of 31.68, and that was also the high tick of the day. So street kind of leaning the wrong way into this one, and we'll see what happens at 31. I like the support.
FCX Hunter wants to know about from the chat. 145 stocks reporting today. We're not going to get to cover them all on our 1 hour show. we'll probably get to cover a dozen or so in depth. So if you have a stock, let us know in the chat or tweet it at us. We will try to jump into and get into that if you have one specifically you want to talk about. But we're basically just going to the chat here right now because some people want to know about certain stocks and we can't cover them all. So FCX, let's go talk the earnings here first, Spencer, and then Joel break down the technicals.
58 cents versus 52 cents on the EPS estimate. Sales 5.168 versus $4.94 billion. So nice top and bottom line beats for FCX.
And stock trading up 2.5% in the pre-market. It was an ugly candle yesterday. Gets some of the losses back. The trend is still not your friend here. This thing topped out and had a huge run late last year when it went from $14 to $20. It's been in a downtrend ever since. So I think spikes are still to be sold. 16.5. You could even put a little arrow on it. I mean, you're not even really above yesterday's high. So it's
Correct.
hard to get very excited about this stock until it can at least get above yesterday's high. Fade trade might be in here too. And I mean, the fade trade has just been working. Even on Google yesterday. You know, Google, you can say, oh yeah, I had a great day. But I mean, it came off the highs as well. They have been fading moves. And that tech sell-off yesterday was kind of out of the blue because they had so many tech stocks trading higher with Google. And they turned around and hit all those things. So you got to watch, you know, basically chasing, I'm going to say it again, in the last couple months, chasing has not paid off. And if you were chasing all these moves yesterday, you got killed. So you get a second shot. It seems like you always get a second shot if you really want your stock. So I don't see any reason to just jump in here and chase FCX here today either, because this is another one. It's traded here a long time. Could it go up to 17, 17? Sure. Is it going to give you another shot at 16? I think so. So that's why if I wanted to get in this thing, I think I'm not chasing it either.
All right. I'd have to agree with you on this one. I mean, this is like an accordion chart. Like it goes just back and forth, back and forth. You might have a head and shoulders on top of a head and shoulders top here. Let's see what happens at yesterday's high is 16.59. Certainly don't want to see it go red on the day. The close is near the low of the day at 16.07. Overhead supply, since you were just over $18 at the beginning of the month here. So, boy, better need to hold those gains here. Like you said, Dennis, you could see this thing back at yesterday's low, $15.99 in a heartbeat.
Pedro wants to know about Wix, W-I-X, which is Wix.com. Again,
where did Pedro come from?
Pedro, good. We like Pedro in there. But you know what? This opened up right near the highs yesterday and tanked. These momos, these small Chinese momos, annihilated yesterday. So you know what? I don't care what they were going to say, and I don't even know the report. I haven't read the report here yet. But when I look at this thing, I think it's probably going down on the report, even before it reports. I wish I would have went short when we looked at it before going into the report. I'd already be up $5. It's trading 100 even right now. All these things topped out. I mean, you saw big turds. Look at Momo, the chart from MOMO yesterday. Opened right after the high at 46.85. High was 46.89, and just whoosh, they flushed everybody out. And Square was similar yesterday, opening up near the highs, flushed everyone out. Twitter opened up near the highs, flushed everyone out. It was like kill all the little Momo's names, the ones that have been hot lately. That's what got hit yesterday. And that stuff doesn't tend to work itself out in one day. It's usually at least a 2-day move. That's why I think it's a bad omen for a lot of these stocks here, at least for this morning. I think a lot of these stocks could be weaker. But give us the numbers for Wix.com. There is a low here around $100, but you know, I think, well, it's hard to say now. Now you're 10 points off yesterday's high, so now you're chasing it if you're shorting it now. Spencer, what's the numbers for
They had revenue was in line with the estimate, and the EPS was a beat by 15 cents, but I don't have the exact.
It's not enough. I mean, whatever it is, it wasn't going to be enough. They could have beat by 10 cents or 20 cents. It wasn't going to be enough because they don't want to own these stocks just suddenly. They don't want to own these stocks as of yesterday. You got to identify those trends coming into the earnings. That's where you can really make some money. You know, the institutional managers too, if you have any of them out there listening to it, that's where you make some money, is identifying the turns in the market. And if you can identify them before everybody else, that's where you make some money. We turned yesterday on the stock. It had multiple highs at 110, got up there, kissed it, opened at the highs, and started leaking. It turned. Then it's coming into earnings. So even if it rallies into it, you have so many people who are underwater that will probably be willing to sell into that rally. So that's why, you know, I think it's 100 even now. It's down $5. It's hard to say, is it going to go lower than here? I don't know. But I think anytime you rally on this thing, I think you got some sellers up there now, especially out near 108, 109, 110.
All right, Dennis. So when you mentioned 5 stocks, okay, in one rant, what order do you
go back to the original Wix?
Okay. Wix, Okay, that's what we're going to do.
Apple says they're not Chinese, they're in Israel. Sorry. Okay, so Asian. Let's go. Well, actually, it's not even Asian, Israel. So overseas. We'll just say overseas. Okay. It sounds Chinese. Don't give me that. Doesn't Wix.com sound Chinese?
Here's a couple
All that
things.
stuff trades together. All of it trades together. These little momos, these little overseas momos all seem to trade together no matter what country they're from.
Okay. Boy, if you were following that seller at 110 here in the last few sessions, you're a happy camper. Dennis is talking about the $100 low. You had a $140 low in this one in January 19th. But you know what? There's no bounce here. It's not like I hit 100 and it's at 101.50. This is at 100. Dennis, what's the bid offer in there? Is it tight or?
No. 5 points wide, 97 bid to 102 ask. There is no market in this thing. It's going to fall another $10. It
could. You know what I would do if I was short here?
But there's the air in there the air to 95.
There you go.
This could go to 95. So if you're coming here at 100, be prepared because I think this could kiss 95 here today.
I would just going to say, like, if I had a short out there.
Now the 97 bid just canceled that. We said that. It's now 92.60 bid. So the best bid is 8 points down from where it is. Only 100 shares.
Get in there. 94.
There's nothing to hit.
No, get in there long.
No, hell no. I'm not trying to catch a falling knife and get my hand sliced off. What have I taught you anything, Joel?
94.80. If I was short and I had a decent sized position, I would put something out at 95 even. June 28th was your or 94.80 was your June 28th low. I mean, but you can just see the air in here. You know, you lose 95, you're looking at 90. So just no bounce here. We'll see what happens. I really like 95 in that one. I wrote down these other stocks here. Square real quick. Let's see if there's a chink in the armor. Oh, the old reversal. You made a new all-time high.
Reversal.
Yeah, 72.80. You're trading up 21 cents in this one. I like that your close was 69.36. If this one goes red on today, I think you got some room down here to 68.20. If you're trying to swing trade, trying to get short 69.5 at 70, you have an out here at, let's give it over 73. 72.80 was a high of the move. 71.60 all-time closing high. And I wanted to talk about Twitter, too, because we talked about a gap fill. Man, I've been keeping an eye on 42 in this thing forever. It broke it yesterday, but then came back and closed above it. So it filled the gap. Yeah, it still looks heavy, though. But I'll tell you, if this thing gets – I just don't think they're going to have a good report. Folks, don't bank on that. I've been bullish Twitter for a long time. I just think someone saw something in the Google report that makes it think that Twitter's not going to have a good quarter. And I don't know how I came up with that theory, but the way they just came out and started whacking it from the beginning, it's just, and I don't know what the exact relationship is here, but I might even sell my long-term holding in Twitter ahead of the report.
Whoa. Joel's going to get out. He's Warren Buffett there. He doesn't sell very often, so take note. From the chat, Gamer there wants to know about UPS. And it is trading down slightly here in the pre-market. They reported earnings, Spencer. What'd they do?
Yep, UPS had the Q2 EPS $1.94 that beat by a penny. Sales $17.46 for $17.33 billion. So it beat there as well. The fiscal year EPS guidance came in line with a very wide range, so that doesn't do me a lot of good, but in line as far as the estimate is concerned. It's
down slightly. This one's hard to get a feel on, but you know what? When you see these charts like this, and you see a stock move from like 120 down to 105, and then comes back up to 112, 113, getting a 50% retracement back of the original move, it's hard for it just to go back up. It's actually easier for it to go down than up. So you kind of have like a new, stocks trade in waves. Well, the next wave would probably be down. So, just ignoring the fundamentals altogether, we know fundamentals, are more of a driver than technicals. But just looking at the technicals here, if I was just to see a chart like this, I would naturally think sell the bounce because you've now, what is the 50% go? Or I'm looking 119 down to 105. So that's a 14-point move, 7 points up. It's like 112, 113. You're right there, and you're kind of struggling right around the 50%. So, and now you have a catalyst with earnings. If this thing starts to get hit, look out and Katie bar the door below, because this thing could be under 110 in a hurry.
I like that 113 level. You had three highs. Yeah, yep, 113. Yeah, I do, because right before you fell off a cliff, and on June 25th, you had a 1304 high. You had a 1290 high, 1255, 13. Yesterday it snuck through when to 1367. But I agree. And if you want to do another retracement fill here, from the low of the move, 105 to 113, that's 8-4. 109. You could see a test at 109 in this thing, and it could still, be validating that up move. So I agree with you on square here at the $113 area as resistance.
Jumping over back to our list, because chat's calming down here a bit. iRobot from last night, huge move for this stock. This is your Zumba or whatever, isn't it? The vacuum cleaner company.
Well, I think they have.
What's it called?
More.
Zumba.
Roomba?
What is it?
Zumba is like
Roomba.
Zumba is an exercise.
Oh, okay. Well, there's too many things. Roomba.
Yeah, I know.
The Roomba, the little automated vacuum cleaner. That I actually could use one of those if you want to send me a gift, Joel. IRBT trading up $11 here. How'd the little Roomba maker do?
Hey, Dennis, send it to the house. Send it to my house.
Yeah, I'll do that.
Remember when I did that with your dish?
I know. Yeah,
and I gave it away.
Yeah. We don't even talk about stuff like that. So mean. I sent, because I don't like to ship, so I'm in Canada, so I have to pay the shipping and the fees. So I send it to Joel, and I just go over and have lunch with Joel and pick my thing up. It works well.
There's nothing wrong with that. Nothing wrong with that.
Nothing wrong. And I don't have to pay because you know what? At the border, it's the brokerage fees, because they look at something and they have to estimate what it is. And the brokerage fees sometimes can be like 30-40% more on something you're shipping across the border. It's expensive to ship stuff across the border. It's better to go over, pick it up, declare it at the border. Usually the guard will let you go anyways, because if it's under $100, they don't want to bother with it. So, and you get to have lunch. I fill up my car with gas and I save the money that way.
Well, also, you just get to tell the rest of the story. You send a dish.
I sent a receiver. I sent a satellite receiver.
And I forgot that you sent it. And so I'm like,
I don't give it away.
I did give it away, and I had to go back and get it.
Yeah, you gave away and like, you didn't tell me we were sending a receiver. I did. Check your text. You even said okay, and I the text messages were there. You gave away my stuff.
All right, I don't know how we got off
you don't know what it is. The odds are it's from me.
iRobot. Give us the numbers.
That was a funny story. Q2 EPS, wow, 37 cents versus an 18-cent estimate. So they more than doubled the estimate there. Sales 226 million versus 219 million dollars. They are raising their fiscal year guidance. EPS was raised by 15 cents on the low end of the range, from $2.15 to $2.30. The sales outlook was also raised, though not by much, but still raising your estimate, your guidance for the fiscal year, and blowing away the Q2 earnings.
Nice report, nice move. Problem is, it's already off the pre-market highs, which were over $86. And the problem is now, because you're below the 83.61 highs, you got to challenge all these other ones, 82, 81, 81.39. So that gives you a wall of resistance up there. If you can get back up above 83.61, then maybe you can continue the move. But the fade trade's been working here. I'm not chasing the stock up 15%, not in this market.
This is a favorite of Gene Munster's. He's mentioned this stock before, a very volatile issue.
Roomba. He's a Roomba.
Yeah. Well, he's into the AR and IR and VR and RR.
He's into the R's.
Yes.
He's a pirate fan too.
You have you mentioned that 86.39 pre-market high. And this is, to me, this is a pretty good chart here set up, because you did have a series of 3-4 highs at 82. You're currently holding 82. So, man, oh man, I hate to say it, but I'd kind of be leaning long as it holds 82. But if this takes out 82, man, there's just nowhere to hide in this one. So 82, great swing number here, holding on to the gains for now. But if it takes out 82, look out here on the downside. Pre-market high 86.39.
A couple stocks coming from back to the chat. Boeing, we haven't talked about yet. Matt and Beyond wants to talk Boeing, BA, and I can tell you Boeing actually had an okay report. this is kind of the day that you don't want to report earnings, though, even if it's okay. They're kind of smacking it around a little bit. So anyways, BA, give us the numbers. They didn't look that bad to me, but you know what? Stocks rallied 30 points in the last 2 weeks ahead of it. So I had to blow it away, and apparently it did not.
Yeah, the Q2 EPS, $3.33 versus a $3.26 estimate. So a beat on that.
That's not a blowaway.
Sales $24.25 billion versus $24.04 billion. So a slight beat there as well. Also raising their sales guidance.
Not a blowaway, not a blowaway. Slight guidance raise is not good enough for BA, considering it was 330 a week and a half ago. Went into the print at 358. It went up. This was one of those you could extract alpha by buying them ahead of the print and selling it before the print. And that's what we're seeing now is the sell-off. Now, I think the pre-market low, I thought we saw a spike to almost 340, Joel. Do you see what the pre-market low is? Joel's on mute.
Yeah, but I was actually about to grab it. I think I had
pre-market low?
44.
Yep. 340.75 is my low.
So 340. So that's your bogey here now, because that's the spike low. We are trying to come down to challenge it because we actually spiked to 351 after that. Now we're coming back down to it. I think 340 level could be okay. But again, this is the day that it all depends on the market. The market starts to roll over, and it could be in tough here. And we've already talked about some of the Momo names. Boeing is not a Momo name, but it's a stock that a lot of people own. And if the market starts to get spooked, if the Momos start rolling over, the rest of the market could continue to roll over, and then that would cause a stock like Boeing to continue to drift down. So I don't know if I'm coming in here and buying it right away. I like the GM a lot better than the Boeing, at least as a day trade here. And GM still is holding above that 37 low.
Boeing also snuck in the report a $426 million charge for an airplane that they're building. So they had to make some modifications. So I think that was a little bit of the negative perceived in the Boeing report. 340.75 is your pre-market low. You got a nice $10 pop off that one to 351, but you're beginning the leak here. I don't see any. What do we got? I see a 339.19 low. That was from July 11th. So if you do sneak under that pre-market low, just be aware 339.19 was the low that you had on July 11th. Also, if you want to figure a retracement on this move, it's probably already did it from 327, 362, 37, 47, 57, 35-point move, 17. You take 17 on top of 344. I don't know. 32.
There's a lot of air math there.
Yeah.
Give me the summary.
344 is a 50% retracement
we say
of the
we
rally.
Talk about less numbers on the show. That was like 25 numbers in 25 seconds. Nobody can say numbers fast. You should be an auctioneer, Joel. Maybe you should be an auctioneer.
You know what? My dad used to take me to horse auctions when I was little.
That's why I love them.
I actually loved it. I loved it, man. But anyways, try
your auctioneer voice. Just try it now. Quote the S&Ps really fast.
I used to quote the S&Ps with my fingers. I don't need the quote.
Do it with your fingers. You're on video now. Show us count to 10.
That's going to be a special session.
No. Do it right now. Hold them up.
You know what this is? You know what this is, Dennis?
What? No, not the middle finger.
I got it up right now. Look at this.
Not the middle finger.
No. Look at me.
He's not giving you the finger.
Is it up there? I think I'm doing it right now. This means sell 1,000 at the market. Sell 1,000 at the market and hurt it.
Hurt it too.
Yeah, I've seen guys do that before.
So 1,000 at the market and hurt it. So let's say count to like I want to buy 1, 2, 3, 4, 5, 6, 7, or show us because they never know this and they find it interesting. Joel was a floor trader for a long time, so he knows all the signs.
How about this? I'll give you one. Pay 20 on 50. How's that?
Pay 20 on 50. So you have to put your head. You put it up here to do it.
You got to. Well,
it's like I would just be like giving somebody hey, nice to see you, and I would sell 50 that way.
Well, your palms.
I think I'd lose a lot of money with the floor signals. I'd scratch my nose a little bit. I'm a little bit sweaty here. I just sold like 100 cars, and I don't even know what I'm doing.
All right, we'll have to do this. This is we don't have time for this because we got Sean Udall coming on.
Okay, bring Sean on.
We will do a special hand signals. I still give Lisa phone numbers. Like if she asks for someone's phone number.
Well, don't give us Lisa's phone number, but do it just a fake phone number, like 555.
Okay.
Whatever.
553 721. All right. There's more numbers. There's too much of a delay. Okay, let's go break it, Sean Udall.
Bringing him on right now. Let's see if he answers. Sean Udall, are you with us?
Good morning, Benzinga.
I love the Sean
like
Udall
that.
good morning. He gives us the best good morning. And he's out there, and it's like 5 a.m. in Arizona, isn't it? What time is it out there?
5:36.
And you have that much energy in the morning. Where do you get this energy from, Sean Udall? Where do you get it from that you can give us the best good morning and you're like 5:30 in the morning?
I'm a lifelong workout believer. And
Nice.
I eat whatever I want. I believe in fried chicken and mashed potatoes and gravy and steak. So I believe you work out, play sports, and then eat whatever you want. That's pretty much the secret.
Great way to live.
It is.
Way to live. I love that way to live. Go ahead.
Real quickly, I've been trying to get Sean to buy a camera, Dennis, and he's actually cheaper than you. So we're gonna have to find a camera.
But we got to ship him a camera.
We got to ship him a camera to get him on video.
Okay.
Right. So, but all right, Sean, let's just get some people were asking us about the overall index thoughts. You and I we were talking, before we had that breakdown to 2,700, we were definitely looking for more meat on the bone. I was able to cover, I'm sure you cover and rotate your positions here. But are we in the mother of all bubbles here, or is this rally just going to keep on going?
Well, it's a great point. I mean, it's entirely possible that we could have a miniature version of a 99 scenario. We probably don't have enough time to talk about all that. But at the same time, I think I've been on your show, I don't know, 3 or 4 times this year. We could just be in a trading range all year too. I mean, we've kind of talked about that. So frankly, it's kind of weird. I mean, I would say we've both been right and wrong on the short calls. We wanted more meat on the bone. At the same time, some shorts have worked, some haven't. There has been some big moves lower and some things, but I will say, I mean, the market fools a lot of us a lot of the time. I've been pretty baffled by the pure strength of some of these stocks that are exceedingly overvalued. I'll say that much.
Like, what about Tesla? Let's just go to TSLA because it's had a ton of headlines lately. And I mean, this is the honey badger of all honey badger stocks, it seems like, because, when they hit their figures, I guess it goes up. But, Elon Musk is talking, on Twitter here, putting his foot in his mouth so many times. I mean, he's, had this fight with the hero who rescued the cave children. I mean, this is just, he shouldn't be, talking on Twitter. And then, it comes out that it looks like, they obviously need to do a capital raise. And it reeks of desperation to say, okay, we need the suppliers to give me a cut so I don't have to do a capital raise. I mean, the stock is, but then, you see it sell off and it seems to always bounce back. When does the bounce back not come?
Yes, I mean there's two that this one, Red Hat, Netflix finally cracked a little bit. Some of these have cracked, but you just hit it. It's they keep putting Humpty Dumpty back together. I think Tesla is a very unique situation. I'm not going to say there's any fraud, but I am going to say that I remember when I was a very young rookie broker. And I'll never forget that, like, a stock that I just didn't like at all was Enron. And it was funny how all the old brokers loved it. Oh yeah, I got my clients at Enron when it was cheap. You just got to buy this Enron. And I'm just like, this Enron looks like a piece of crap. And again, I'm a math, finance, fundamentals guy.
Yeah,
I can guarantee.
But that works in the long run, the math and fundamentals.
Yeah, but I was just going to say, I guarantee you, Warren Buffett never liked the financials of Enron. And yet tons of people like. Now, Enron was an extreme case because didn't they go bankrupt or something? But, a Tesla kind of reminds me of Enron. Like something really bad could happen and Tesla could wipe out effectively all their equity. And the stock trades like that risk doesn't even exist. So that's just a weird oddity in this market.
And there's a lot of stocks. Like, I think we had this conversation a few days ago without you. And I'm just saying there's like selective bubbles out there, and it's not in every stock. There's a lot of stocks that are dirt cheap. It's just like selective companies that continue to go up, continue to outperform no matter really what they say or do. They're just like loved. And I was blaming a little bit of, ETFs for this as well, because, you get new ETFs on the board all the time. They're these growth ETFs, and they just come into the same damn stocks. I mean, every growth ETF wants to own Netflix because they can market it, to everybody. They don't buy stocks like General Electric or, these value things, because those are boring. They're not marketable. So they're coming in, creating new ETFs, and these new ETFs, if you get, you raise up another 200 million for a new ETF or 500 million for an ETF, it piles into the same stocks, these same names that keep going up. And I wonder if a lot of it isn't to do with that.
I think you're right, and I think the word I've used similar terminology in the stuff that I produce. I don't know if I've used the term selective bubbles, but pockets of bubbles. It's the same thing. I mean, that's really what's going. I mean, the market's not in a bubble. I mean, the Cisco in 99 traded somewhere in excess of 45 times sales, I think. So that would be equivalent today of like I don't know, what's a faster growing, Microsoft isn't trading 45 times sales today, right? CRM would be better. CRM is not trading anywhere close to 45 times sales. So, the whole market is not in a bubble, and there's tons of exceedingly cheap stocks, but I mean, there's like 3 bubbles out there. I mean, FANG's a bubble. I mean, I still think the easiest short is this cloud, the cloud stock short. So things like Adobe and CRM. Now, CRM I don't like as much as a short, but the stocks.
Are you still short Adobe?
Yeah, that's
I am.
Yeah, you taking some heat?
Not really, because I'm maybe down 2.1% or something. I mean, that's the beauty of some of these shorts, is like they'd have to move a lot for really to put me in much pain. But yeah, I mean, these slow growth cloud stocks are priced like they're growing at 25, 35, 40. Even I've recently shorted Microsoft just because you got a very slow growth company that now it's trading like it's growing at about 4x its current growth rate. Well, it's not. It's not growing 4x its current growth rate. So the valuation now is getting very, very stretched. And now I'm not sure I'm going to really nail this one. At the same time, I'm not really worried that it's going to go up 20%. So to me, it's like a safe short. And all I need to do is the NASDAQ to crack a little bit. And I'll make 5 to 10% or more on it.
Okay, what about your FireEye long here? I know that stock has been something you've been battling with for a while. It got the upgrade and then went up for a few more days and came down. Are you still sticking with your FireEye long?
I am, but every now and then I get one wrong. And this one is getting pretty long in the tooth. So we'll just have to see. But at the same time, I've hit CyberArk and I basically hit every name in this group except this name. So
you can't get them all, Sean.
No,
you can't get them all. Mean, if you're about 100%, you're gonna have all the money in the world eventually.
No, nobody
does. Bow down to you.
No, nobody bats 100%. But I don't know. I mean, this one kind of seems like a pretty easy long, to be honest. I think put it this way: if I'm wrong, I doubt I lose much money. I mean, I doubt they take this thing to like $8 or anything. So worst case, it probably goes to really the worst case in this name is opportunity cost. So, and sometimes that's bad. Hey, I mean, if I can find something else that goes up 20 to 50% and I'm sitting in, I got a decent chunk of my portfolio tied up in a name that does 0, that's not good. That's just as bad as a loss in some cases.
Qualcomm, I guess that deal with NXPI on again, off again. I guess the deadline is looming. I know they have earnings coming up. I remember you were talking about this one, backing up the truck near the $50, $52 area. Seems to be in a trading range. Thoughts on Qualcomm?
A single favorite large cap tech stock. In fact, I want more of it, even though I pretty much have a full position. In fact, I might have a slightly overweighted position in it. I almost don't know if I could have too much of this, because this is, again, very similar to Apple in 2013. And NXPI, I think no matter what happens, I think Qualcomm will go up. Might not go up in hours to days, but I think no matter what happens with that deal, the stock goes up. I kind of hope the deal doesn't go through, because I'd actually like to buy NXPI on a raid. But, this is 5G. This is Internet of Things. I
want to ask you that here, too. I want to go to NXPI.
Yes.
Because I was eyeing this one, too. I mean, you're now 30 points off of the takeout price here. Where does the risk reward start to make sense to buy NXPI? Because at a certain point in time, this isn't even going to go down that much when it gets rejected. I mean, it's pricing in like it already isn't going through.
Well, I don't know if it's going to drop a whole lot from here, but you got to be, algos can do amazingly fast moves, right? So, I don't want to load up at 100, even though I think the stock will go to like 150 on its own, basically. I mean, look, this stock has gone nowhere since 2015, and this is a very good semiconductor company. So, you could make a case that Qualcomm probably gave them sort of a rich price whenever the deal was first announced. Well, if you compare these guys to, 5 or 6 other semiconductor companies where NXPI has better growth, NXPI hasn't done anything. So I almost wonder if the stock wouldn't be kind of closer to 150-ish on its own had there never been an M&A deal.
So are you?
So anyway, we'll see.
Now?
No, I'm not. But again,
you're eyeing it.
I am eyeing it. I mean, I think 100 starts looking pretty good, but I mean, I'd love to catch it like another 10, 15 lower. So that's kind of, I'm hoping the deal doesn't go through. I think we'll get a really good entry on it.
Gives you a chance to buy it.
Yeah.
Just another one I know that you've been sticking with for a while, and boy, it's had several down days in a row here. I saw something positive in Barron's about Finisar not really helping it. Are you sticking with your Finisar position?
Yeah, because this I don't really have a whole lot of concern here. This is another weird one, as weird as sort of Netflix and some of these stocks are on the high side. Yeah, I don't know if I've ever seen an Apple supplier. Okay, now this is a new Apple supplier, but I don't know if I've ever seen an Apple supplier trade sort of this poorly for this long. And there was a lot of concerns. Are they going to get that Texas facility online in time? Well, they did. Are they? There was another rumor they were having some quality issues, and I think that was a bunch of malarkey. So, you just kind of line this up. It's sort of an exceedingly cheap stock, amid so many companies that are super expensive. So, here's the thing I would say about Apple. In fact, I was going to talk to you guys about this had you not asked me. I actually like a few stocks that are suppliers to Apple in this 3D sensing space. And even if Apple doesn't really do well, like what if we don't really have a very good Apple cycle? We got new phones coming. That's going to be good for a little while. But what if Apple really has a saturation issue with iPhones? Well, the one thing they don't have a saturation issue with is 3D sensing. So I think what's going to happen is Apple's going to go from one product with 3D sensing technology to maybe their whole lineup. I don't know how many phones they're going to have with 3D sensing enabled, but it's going to be more than one.
What's the company that we buy to participate in?
Well, that's Finisar, IIVI, LITE are the top 3. Hymix might be another play, kind of a cheapy semiconductor play.
I've got that one in my long-term portfolio.
Yeah.
I just stuck it in there and forgot and have tried to forget about it. It pays me a little dividend, and it was actually I think it was Kolb that actually brought it to me first. There.
Yeah, no, Hymix is in that space. So there's a few. But I really think the top 2 are Light and Finisar, and both are leading Apple suppliers. I actually think Finisar is going to gain some share against Light, so we'll see. But then 2.6, IIVI is a good solid name in that space, and that's one of the few. Like if I go out and look at year over year, like out year growth, that 3D sensing is probably going to be one of the strongest growth areas of tech the next 2-3 years.
You worried about Twitter here at all ahead of the report? This $42 area, they took it out yesterday. I'm thinking about trimming some of my long-term position. It seemed to me like the street thought what was good for Google yesterday was bad for Twitter. I don't like the technicals on Twitter. What are your thoughts?
Well, I did sell a pretty good chunk of it. When a stock goes up 3x off of lows, I trim quite a bit. Honestly, I'm kind of thinking about shorting some puts to replace a little bit of what I sold. So I'm not too worried about it. I will say, Twitter's going to need a good report.
What's you selling? I wouldn't go.
What strike would you go?
Yeah, what's
where would you be comfortable selling puts?
I'm actually doing the 48s because it's effectively buying the stock a little bit cheaper than I'm buying the stock today.
Oh, and I actually strategy. I like that. Actually, how much you get for 48s?
Oh God, I got quite a bit of like $6 or something like that.
Yeah.
Yeah. So, I mean, it's pretty good premium. But here's the kicker. I was just going to say you could do them lower, which puts you in the stock cheaper. I don't like that though. I don't like shorting a put and collecting $1.50 just so I can buy the stock $2 cheaper than it is today. Right. It's to me, it's not much upside. The key I always say with buying or shorting puts, you got to have the money to buy. If it's put to you, got to have the money to buy all the shares you're shorting. So that, I've seen people literally blow themselves up because
they think, they don't realize, that, hey, if this falls 10% here, I can't afford to buy all this stock. And all of a sudden I'm going to get margin calls from my broker because, they're looking at the notional value of, what you've got, exposure to as well. At least the good ones, I hope, are looking at that because, if you got, a $50,000 account and you're writing $500,000 worth of puts, I mean, they got to watch themselves. So
that's right. But no, I like the 48s. I go out a month or two. I think I might have got like 640 or something for them. I did it a couple days ago, so the price is probably going to be a little different today than where I did it. But no, I think, and here's the thing, what if Twitter is in this sort of becoming anointed now? We've seen these stocks get seemingly expensive, but they're really not expensive relative to other names. If they keep reporting well, I think the upside is relatively good. So, because you get more excitement on a stock after it's gone up a lot. So for right or wrong, there's way more people interested in Twitter now, at 42 to $45 than there were at 15 to 25. So
that's always the way though, because media chases price and they pump, and a lot of people are just down there watching what everybody's saying on your CNBC or in your papers. And when the stocks are in the doghouse, they're only talking bad about it. It's like,
that's right.
It's so, and I've always been a momentum trader, but a contrarian investor. And I feel like, you're a contrarian as well. And I mean, it's hard to be a contrarian trader sometimes because the momentum starts going one way, you get run over. But if your time horizon is long enough and you have enough money to wait it out, I mean, some of my best investments have been when stocks have absolutely been in the doghouse. Like I was buying Merck when everybody hated it down at like $28. And now it's at 63 and people all love it here. But, you're going back a few years. But it seems like if you have a long enough time horizon and you don't get yourself on margin where, you're going to get, margin called if the stock continues to fall, sometimes being a contrarian investor really works.
No, that's right. And even, I would even say something like, I think you mentioned GE earlier in this call. If somebody missed this whole move and was saying, oh, hey, I need to buy something, they're probably going to want me to say, yeah, buy Facebook or something, and instead of shorting it. But I'd say buy GE because GE literally lines up as like one of the easiest longs in this market right now. The key is you can't care if GE's down 20 cents a day on a day where the Nasdaq's up 100 points. If that's going to cause you anxiety.
Out of favor.
Why is GE going to come back, Sean? Why is GE going to come back?
Personally, I don't like GE, but I like a lot of other ones. But
yeah, I think the company, if this is a complex kind of deal, this is sort of, you got to value all the parts of the business, right? But if I basically value all the parts of GE, it's probably worth $30, maybe even 40.
Sure.
Now, you're not going to get that over a short period of time, but there's just, there's a lot of value in GE that is not being recognized because it's just out of favor and they have a hard time with, beating estimates right now. But, sometimes people get just way, way too wrapped up in 1 or 2 cent EPS beats and misses. And so stocks get incredibly overpriced or underpriced. But no, this one lines up easy. It just, here, the long duration works if you have the right picks. I know some people who hold really, really stuff forever and they never make money because they hold bad names. So you have to be able to differentiate what has quality, what has cash flow, what has durability over time. If you can do that, you hammer it long term. But no, I just think GE lines up. But one of the easiest, Qualcomm's better. I think Qualcomm is sort of similarly out of favor, but they do like 20 to 25 billion cash flow a year. So Qualcomm could literally buy the company outright every 4 to 5 years.
Buy one stock today, and then somebody wanted to pick from the chat. Pick one stock that you would throw in your mattress right now and not look at for the next couple of years or whatever.
Qualcomm's the easiest one. Qualcomm's the easiest one. Yeah.
So
yeah, but I mean, I could do GE. If I've kind of been nibbling at GE. Here the other thing I like it when stocks are really, really cheap and everything else is trading kind of dumb, because I want to have a few things to buy. So while other people are worried about why is a position not working in the short term, I like GE. I hope GE stays down for a year. Because if it stays down for a year, I'm going to have a lot of trading gains that I can sort of circulate into GE and build a pretty large position over time without using any of my current cash. So
Sean, we got carried away with you here as usual, and
that's good though.
we got great talk. I mean, it's just like we could like talk like this for an hour on the phone.
Well, hey, before I go, you guys got to tell me what your favorite picks are.
We're so short term.
Yeah. I like GM down here. I'm going to add a little bit of GM to my portfolio.
GM, the automaker GM?
Yep.
We're in the D, Sean. We got to represent.
And I like Twitter short. I think it's way overdone over here. And I think you're in danger selling those 48 puts. And I think you're going to see that stock in the mid 30s soon. So that's. I
hope so. I'd love to.
My time horizon is so short all the time. It's hard, but I'm trying to think. Like I did put a couple names in the investment portfolio. What did I buy in the last week, Spencer? There was one I just threw in there.
You're asking me what you bought?
I threw one in there. I was going to forget about for a while. It was in the dog.
That's the best way to do it.
Yeah, and I don't even remember what it was. So
was it a biotech?
Literally made myself forget about it.
Was it a biotech?
Doghouse. It was I think it was a tech name. Something that was in the doghouse. And anyways, I got to go look and see. But I did buy something in the last week in the long-term invest portfolio. The short-term portfolio is full of 20, 30, 40 different names all the time. And they change day to day. So that's the day trader in me. So, that just goes with momentum. Like I think in the short term here, I think a lot of those Momo names broke yesterday down. And I think, that, you see a little bit of a lift here. I think it's a selling opportunity in some of those names. But anyways, Sean, it's a minute left here. So thanks again.
Thanks a lot, Sean.
Hey, thanks, guys.
Time. All right.
I want to do two stocks here for Samir. He's looking at COO. Real quickly, this stock has had one heck of a run, not quite an all-time high. Yesterday, I just don't like it going 254.14 and then selling off $4. So holding that close is important. Under 250, look out. Nothing until 246.5. And then MYOK. Let me take a look at this one for you. What do we got? Let's see. It's flat at 57.10. I don't know. I don't have much
opinion. What stock is this one?
MYOK. The thing only trades 300,000. Yeah, above 58.25, you got room to 60. So, you want to do this TORC, guys, before we wrap it up?
Or can we also discuss HMNY real fast?
Sure. Go ahead.
Let's do it. Now, we get down a couple minutes extra here, but HMNY, this is an incredible story. So it does the 250 for one reverse split yesterday. And if you were so inclined to buy that before, yesterday at the close, if you were so inclined to say, I like this, it's going to take away 250 times my shares here. But the price is going to go up. Well, you're down 32% one day. It literally, the adjusted close is 21.25. It's trading at $14. It just fell another 32% in one day. So if you bought it yesterday at the close, you were down 32% here in one day, just after the reverse splits. These things are eternal sells when they start reversing splits like that.
I don't know what comment to make.
Already down 32%.
It just gives you
dry shifts part 2.
It gives you more meat to short, I guess.
That's what it is. It's more meat on the bone. So it's like, oh yeah, this thing's still going to probably zero. We just got another 21 points for the new traders to come in here and start hitting it down. Well, and can you have short squeezes in here? Yeah, we saw dry shifts rally over 100% a day before. So these things can do that. But that being said, I mean, this is just, if you're buying stocks like this and hoping these things are going to turn around, I mean, this is like a bankruptcy story here. It's just a matter of when, in my opinion. If it's not already bankrupt, I don't even know. Like, is it already bankrupt? It was like 7 cents yesterday.
There might be close to it. One more. This is from someone in the chat. PayPal. They report after the bell today. Let's just look at that.
Love this stock. I don't own it. I wish I did. I've talked about it with Jeremy Newsom multiple times, and I've had lots of chances to buy it on the pullback. I know it trades like 28 or 30 times. A little bit, it's a little bit expensive, but I think, and I've said this on the show, I think I said it was like 82 or 83 bucks. I think it's going to 100. I think it's going to $100. I'm a buyer of all pullbacks in PayPal. You're not getting much of a pullback here this morning, but I think eventually this thing, I think it sees $100 by the end of the year.
It has a report coming up, so of course anything can happen. Really big 2-day move here. So could do, if you're a little bit, if you would, want to trim a little bit or sell some calls and protect your position here, but a great looking chart, hard to argue with it.
And then one more, Torque, which you mentioned, Joel. They announced a positive top line result this morning. You saw a tweet, Joel, from Adam Fierstein, who's we know is a plugged in biotech reporter, who said this is an outright short. I don't know how he can know that, but
nobody can know anything. But
I don't, have any insights into.
He's a
stock.
fundamentalist.
Right.
Obviously, long term. He gives out long term outlooks, and nobody knows stuff better than Adam Fierstein. So if he's saying, this move is not sustainable, I'm not buying it up here. Now, that being said, I mean, these things can continue. You can trade anything with momentum on your side, and this thing is up 150% here today. So I'm absolutely not shorting it. It's in blast off mode here. I mean, it's been over $26 already. So saying it's going to be a wild child there, but if Fierstein doesn't believe it, or isn't a believer, I'm not a believer in the story either.
All right. I guess that's it. Joel, anything final to add?
Man, this one has just been on a tear here in the pre-market. You want to see follow through that pre-market high of 27.89. This is blowing away the former all-time high at 21.10. So you want to see it get back up to that pre-market high, take it out. If not, I think you find sellers ahead of it, and it's very hard to find support in this one. So go ahead and wrap things up, Spencer.
Yep, that's going to be it for today's show. Thanks, everyone, for listening. On tomorrow's show, we're going to be joined by Mark Chaikin from Chaikin Analytics. If you want to catch any part of our show again, you can do so on our podcast, iTunes, SoundCloud, Stitcher, TuneIn, or Google, or just go to YouTube and rewatch the show there and see our pretty mugs. Thanks again to all of you who joined us in our chat rooms. Thanks to Sean Udall. Hope you all have a good rest of your day, and we'll see you folks on Thursday.